is actually in an area right here where you could maybe have tried to buy some Friday, on a lower time frame pattern, just because the risk is so low if you can find a low risk spot. But there's probably better opportunities right now. And if it's going to be the 1,000% winner everybody talks about, it's going to close that gap and you're going to be able to get on it before it really gets moving. So, I guess the question is, how obsessed with the stock are you? And if you, really love it, you can try to play it. I actually do think UPSD is going to recover here. But, there's going to be plenty of time to get long it, in my opinion.
And just because that's your opinion, it doesn't mean you're not managing risk and using stop losses if you play it.
Yeah, exactly. I mean, look, big gaps, like people expected UPST to go higher on earnings and it got smoked. And
Right.
so there's people that are caught. And I don't care what you say, there's people who are obsessed with UPST higher who are going to be selling it as it rallies up. So, it's going to give you an opportunity to get long. Now, if you want to try to buy it down here, just manage your risk, and that's fine. It's just maybe you like it more than stocks that are making new highs right now, and that's fine, but just manage your risk and understand, you can probably wait and you'll be able to get long it.
Perfect. The market always has the ultimate say at the end of the day, for sure.
Exactly.
Okay, Vikram rephrases question. So, yeah, this is a good one. How do you know if it's a shakeout or just distribution?
Well, because it recovers. So like
Right.
this is distribution in that people are selling it,
Mm-hmm.
but somebody else is buying their shares. And all we're watching here, like there's no reason to get long this. We're just like watching the supply demand dynamic take place, right? Like this is definitely distribution right here. This is distribution. And to me, when you see this, like this is a total avoid.
Mm-hmm.
So this is distribution. This is definitely distribution. This is more distribution. But this is a sign like, okay, maybe there's a bigger player here that is buying this distribution up. Okay, we'll keep watching it and we'll see what happens. This to me is like chaos right here. And it's like this is distribution. So this guy right here probably created this. The guy that sold here is probably selling more here. And
Mm-hmm.
we're just like sitting here waiting to see what happens.
Mm-hmm.
Now, to me, the first area to kind of be interested is like right in here. And honestly, this right here is probably this same guy, but this same seller wasn't finished yet. Um, and we're just like watching it. Like we're a small time player, at least I am. I think most of you probably are too in the grander scheme of things. And we're waiting to see who's going to win. And then we win right here, or the buyers win right here. When we clear this trend line, this is an in the wick type play, actually. And that's where buyers overcome sellers. Um, so I don't know if that really answers your question, but this is distribution, but this is also accumulation. This is just a stalemate, and we're waiting to see who's going to win.
We're waiting for that pivot point to form.
Exactly.
Perfect. I think we are good. Is this a good time? Do you think, Oliver, to take a break and come back in about 5 minutes, five ten
Yeah.
minutes? Perfect. So everybody, it's 9:56 right now. Actually, it's 12:56 Eastern time. So we'll come back at about 1:05 and keep on going with the rest of the presentation. So yeah, feel free to stretch your legs, get some food, get some water, and we'll see you back very shortly. All right, everybody, welcome back to session 3. We'll continue on from here and go through a lot of examples, and also at the very end talk through some faulty chart patterns and what to look for. So with that, Oliver, I'll hand it back over to you, and let's get started.
Okay, cool. Thanks, Richard. And actually, before I move on from this, just because we're here, um, so when I go through faulty patterns, I'm going to talk about stuff like this. This is what I call like dagger selling or whatever. Call it whatever you want. But this is like major distribution here, and so like I would certainly be avoiding this pattern for multiple weeks or months until it repairs, which is exactly what happens here. So just when you see stuff like this inside a base or coming off the highs, distribution, major distribution, you definitely want to give something a couple months. But I'm going to show more of that later. But I figured since we were here, I would talk about it. All right. So first things first here, buying in pieces and why it's important. The goal for me, at least, is to get a large position without taking excess risk. To do so, you have to buy in pieces and average up while raising your stop loss. So I'll give a quick example here. So for example, use an outside reversal setup into the 20 EMA for your initial purchase. So, you buy some on that outside reversal with the stop at the low of the day or below the 20 EMA. And maybe at the close, that stock looks like a bull flag. So then the next day, you could add on the breakout of the bull flag and raise your stop loss to the low of the day of the bull flag. And so the key is there, you have your initial position and you've got your stop, right? And then when you add, you're essentially able to raise your stop so your initial position is, risk free, and all your risk is on the add, and you're able to get twice the position with, one set of risk, if that makes any sense. So if you follow me on Twitter, you'll see that I often say, looking for follow through. Follow through is key. It's absolutely key. And the reason being is it gives you an opportunity to risk profits to increase your position size. So, piecing into positions, via all the different tools, allows you to get a large position as possible, within reason as to how much risk you're taking, without risking excess principal. So I can just tell you the way I trade. I often, take scratches and losses on my initial piece, and I feel like I'm making no progress. It sucks actually, but then I will get that add on, and I'll hit a big trade hard, and it's like boom, like all of a sudden like things change dramatically. So the key is not to take a big loss on a big position, but to maybe buy in like two tranches and, kind of get that big position on, with less risk. So kind of an example, and I'll use numbers here as to how you could do that, is let's say like the 20 EMAs at 35 and you buy at 36. So like the previous day's low is 36, it comes down, maybe it finds support at the 20 EMA. And if you're real aggressive, you might even try to buy a little there. But, for the sake of this example, you buy at 36 on the reversal and you've got a $1 stop. So you've got about a 3% stop. Let's say you took a 10% position. So you're risking about 30 bips, right? And let's say the stock closes higher to 38, right? And it looks like a bull flag. Or maybe the high of the day was 38, it closed at 37.75 or something. Then let's say the next day the stock opens at 37.75 and it follows through out of the flag through 38. That was the trigger for your flag. You choose to add a 10% position, and let's just say you got filled at 38.50. You had some slippage, or we don't always act quick enough. And now you've got a 20% position and your average cost is 37.25. Your new stop loss is the low of the day, so it's 37.75, right? So you risked that initial profit of 5%, give or take, on your initial purchase, and you doubled your position size, and now you have the opportunity to catch the real move. That move from 36 to 38, I don't know about you guys, but that's not what excites me. It's great, that's initial progress, but you have the opportunity to catch the real move, the 38 to 50 or the 38 to 60, whatever it is, with a sizable position, but you didn't have to take, a ton of principal risk to do that. So, this is just one example as to how you might do it. But, think about that BGU example where, you nibble a little in the post market, some in the pre, some in the regular session. All you're doing there is kind of averaging in and trying to get stock on without too much risk. So there's different ways to play this. If it's a stock you have massive conviction on, maybe you're taking an even a bigger initial position and you're risking more than that. But then when you're adding, your position's even larger, whatever it is. So, take into account your conviction on the trade and how much size you eventually want to have. And then I would also say, you want to be doing this like near the beginning of the move, within the first 2 to 3 days or so, because especially this year, taking those pyramid add-ons, further and further away from that initial pivot, you're often getting scummed out. So you want to be very attentive to your cost basis. And really the key for me is, okay, we got a positive reaction to our initial spot. We add on follow through, and then, we get an opportunity to see what happens. But this is a real important concept. And I think once I'm really, really good at adding to positions, in the sense that I'm not afraid to add. And I don't have the highest hit rate, but when I get a stock right, I usually, get it pretty right, because I'm usually adding to positions. So I think this is a way to do that. And so I just wanted to make sure I drilled this home. Any
Yeah.
questions on that?
Yeah, I think this is probably the most important concept that we're talking about in this entire session. Like the setups are great, but those are almost interchangeable in terms of building into positions. So I think this process that this example really shows excellently is you're financing your risk. You're just kind of risking profits to build into a larger position. So if you really get a big move, it'll really help out your account and move that needle. But if it turns against you, you're taking a pretty small loss, and it's basically just a scratch trade. So it's really keeping the risk very small while having the potential of just a few really strong trades to really make your year. I think this is really, really key and definitely a golden nugget. So if you're not taking notes right now, definitely go ahead and like work through this example, try to find other types of situations like Oliver said, where you have an earnings gap up, you add on the post flag breakout, then you add on an EMA crossback, all those different situations where you're not moving up your cost basis too high too quickly, but you're building in and sizing up as the trade kind of confirms and goes in your favor basically.
Yeah, and so like another way to do this is like, let's say that we're buying a wedge pop near the bottom of a weekly base, and then we get the cross back, near the top or the trigger of the base. That's another way you can average up, and it's not really extended because you haven't even broken out of the weekly base yet. But by that breakout, like, you've got size on. And so the thing with this that you just have to be at peace with is sometimes when you add and that bull flag fails, like, you may make no money. And like that happens for sure. But when you get these right, you can really, really move the needle for your account. And I would even say that I, can make the majority of my money in a whole year on like 3 to 5 trades, where I really, really get this right. And so, this is sort of my real edge, I think. So, you know, try to incorporate it into what you do if you're comfortable with it. And if you're not, then don't. But, this to me is kind of my real edge.
And here you've kind of thought about it in terms of one total trade where you've calculated your overall cost basis. Do you ever treat an add-on buy as kind of a separate position and have it with its own stop loss? Or how do you kind of manage those two different buys, I guess?
Yeah. So let's say that I take another buy area on a stock. I'm treating it separately. Like I'm treating it
Right.
like another position. And then let's say that second position gets working to the point where the overall stop loss should be moved up, then I'll kind of start trading it as one big position. Um, if that makes sense.
Yeah, that makes perfect sense. And I think we'll really dive deep into that in the next webinar when we're talking about position management, stop loss management, risk management, 100%. And yeah, and I think one more thing to mention here is you don't want to run up your costs too quick. as you mentioned. That's why you kind of like those breakouts where then they go sideways, form another flag, break out again, because then you're not top heavy, right? You're
Yeah,
keeping your costs lower.
exactly. Yeah, like you want to be careful in how you do this. Um, and this obviously worked a lot better last year than it has this year, but it's
Yeah,
still definitely worked this year, like definitely. So the key is to be consistent, I think.
perfect. Let's see if there's any questions. People are asking about overall position size. I think that's another thing we'll cover in a different webinar. Um, no, I think we've covered most of the questions we already talked about, so I think we can move on. But 100% rewatch this clip in the recording because I think this example really shows Oliver's process really in depth and how he builds into a position, either really capitalize on a big opportunity or it's just a scratch trade, move on to the next one. So I think this was really excellent.
Okay. All righty. So we're going to go through some examples now and just kind of talk through the ideas. And then even after this, we can hop on off the slides and look at some other stuff live. Um, but basically, first one is Affirm. This is a name that I was really focused on, and I actually ended up not really getting this one right. And I'll explain how. But basically, there was a heavy volume bull snort right here, this big gap up. And to me, this was like a U-turn where you could have taken this, and I did take this trade, and it was stopped out. It didn't work. Um, and then there was an undercut and rally pattern followed by a gap higher. So we undercut and rallied. I didn't take this. I'm just, for me, I would have taken this the next day when it went higher. Um, this you could have tried to play it in against the 10-day, just for whatever reason I didn't. But
You also had earnings the next day. That gap, the second gap up was on earnings. So
oh, okay, this was
yeah,
Amazon, and this is
yeah,
okay. So that's probably why. And that's they don't make it easy. So this could have been a gap up you bought then, and they shook that out too. So they've really made it tough to get on board this one. Three, another potential entry, this kind of short-term little consolidation, inside bar, volume dry up, and we go and it looks great. But what happens? This technically, depending on how tight you keep your stops, like it technically didn't fail as we didn't lose this pivot low. And then same deal here for another potential entry at the 10 EMA, this little kind of mini flaggish type look, and it starts to work. And I was in this one and I thought it looked great. And then I actually stopped on it for a small winner. But why did all of this happen so chaotically? Because the indexes were in a correction. So if you think about how we talked about with relative strength, if you were to judge the index, it's going down, this stock is moving higher. And the reason that I really messed this trade up is this is a nice tight descending channel. We shake out this low and come up, and we have an inside bar, and we blast out of this channel. And I watched this. This was my main focus, and I didn't pull the trigger on this. But this was the buy area that worked. And the reason why it's important to, the way I trade is you can take, 2 or 3 losses or 2 or 3 trades that just don't work. This was like technically a winner, but, that's not why we're in it. But this was the winner that paid, right? This was the winner that worked for 40-50%. And so, the key is the way that I trade is you want to take small losses, and sometimes it takes multiple attempts to get on a stock. But if the stock is going to work, like this one in particular showed just so much relative strength. We had a reversal extension to the downside on the Qs, and this was the first stock to go. Like this thing absolutely blasted, and the volume was massive. So I blew it. I know a lot of people got it, but that just kind of highlights the idea that you pick spots, you take small risk, and eventually once the stock is ready to go and the indexes are kind of on your side, this is going to be ready to go. And that's exactly what happened. So the one thing I'd say is this is one of the first stocks to go, and these stocks are often some of the biggest winners. And if we look at this, really two unfilled gaps, and basically the first time we come into the 20 EMA, which I find is often the moving average that will hold the strongest stocks. We have an inside bar, and then we bust higher on volume literally the day the index bottoms or the day after or something. And then we hold support higher, and we trend up the moving averages. And this is just an example of a descending channel, inside bar, volume dry up, followed by a volume breakout.
Perfect. I'm not seeing too many questions about airframe specifically. There's a question here from Jason. Was there not a pivot back at the high of that red candle that the green candle blew through? So I believe the reversal extension, well, I don't know, on a lower time frame, the reversal extension time frame right before 5, I think he's asking if that's also a pivot. That high of that candle.
Right here? Yeah, absolutely. But it didn't trigger.
Right.
So yeah, this would have been a spot to watch if we had broken out here, but it didn't break out. And notice here we're double inside day. So you're waiting for this breakout. And this is an example of the Livermore quote. Like every time I wait for the pivot, I make money. We don't trigger the pivot, right? We fail down. But then it's what happens is we trade inside again, and then we go inside and up. And the market probably just wasn't ready yet. This stock wanted to go higher here. Higher, but it got held back by the index because the index was correcting. And then once the index showed relief, it really exploded. So, that's just an example of seeing the bigger picture, seeing the relative strength, understanding where the index cycle is. We were in a down cycle and this thing's going higher, and, staying with these stocks that exhibit relative strength. And then this, I can just tell you, it went so fast. This thing really exploded. I remember the day. I didn't pull the trigger, which, that's part of the game, is pulling the trigger and being quick and ready to go. And, I wasn't. But this was a great setup. This is a really great setup.
For sure. Let me see if there's any more questions. Would Oliver consider buying small in that inside bar right before the move out of this descending channel? It is on pretty low volume. You can see the volume dry up as well.
I think in this instance, because the index is still correcting, like part of the reason I didn't take this is I thought the index had another big down day to go.
Right.
But like, why buy here when you can just buy here and you're getting confirmation?
Right.
Sure, you could in hindsight, and it worked, but it could have gone down and filled this gap. So I would have just waited.
Perfect. Yeah, I think we can move on to the next example.
All right. So FRHC, I wanted to show this one because it's kind of like a pattern within the pattern. I sort of wish I showed the weekly here because this looked like a big weekly bull flag. But on the daily, it looks like a big daily descending channel. And really, this is like a little wider than I would like. But I sort of view this as like a major base versus like a continuation channel, if you will. And so is what we get here is this was not on my radar all through here. But actually, Jay Oliveira, who's on here, I know today, he put this on my attention when we had this gap up here on volume. And if you go through and study the volume in here, there were a lot of volume signatures in this base that made it worth watching. So let me zone in down here. We trigger the wedge pop here, and it has an unfilled gap, which to me is a sign of strength. We then put in another subtle little gap higher. And so for me, there's no real entry here yet because there's no real way for me to manage my risk. But then is what happens is we put in a short-term bull flag. And what do we have here? We have an inside bar. We have another inside bar. Look at the volume dry up. there's volume dry up on the first one, but there's extreme dry up on the second one. So unfilled gap, sign of strength, power, extreme volume dry up. And then when we take out this high here, this is the entry for me with the stop, down here. And then kind of talking about pyramiding into positions, the reason this is a really awesome trade is because we go up and then what do? Inside, and you get another entry here, like right away. So you could add and increase your position size and raise your stop to here. And then it trends higher and has a multi-week advance. So the only thing I don't like about this stock is that it's so thin. And if you were to kind of look at the movements here, it has these big wicks. So for me, you kind of have to take a smaller position. And I did take this trade, but I had to take a smaller position just because of the way that it trades. And sure enough, I got out like pretty quick here on the open. And the reason I got out so quick is because I was real worried it's so thin, this thing could just like fall apart. So not the ideal type of stock that I like to trade, but I wanted to show this kind of example because where does this little flag take place as well? Right at the trend line. So 0.1, 0.2, 0.3, mini flag, double inside, bust out on volume, positive volume signatures in the base. Really, this is sort of like the crossback, wedge pop, crossback, confirmation, get to add, and you can have a good sized position going higher. The reason I highlighted this bar is this is kind of the first sign of distribution in that it trades up, gets rejected, and it's on volume. I didn't think it was worth selling or anything because it's like we're still at the beginning of the advance. But just like an example, these funky illiquid stocks have weird movements like this, and it's why I don't love to trade them. But I just thought this was such a great example of some of the concepts we talked about today.
For sure, this kind of puts it all together: the longer term base, the pattern within the pattern, all that really coming together, and the like super tight flags that it forms right after that break through the descending channel.
Exactly. And the cycle, so we know we're in an up cycle and we're just kind of hopping on, and then all the things that you said.
Perfect. Yeah, I'm not seeing too many questions about this one, so I think we can move on to the next one.
Okay. So let's look at LSPD. This is like an econ type play, so it kind of fits that theme. And the reason I wanted to highlight this one is it had that, big weekly, monthly base that, I talked about. So multiple months long, multiple month flat base type pattern. And then I say, notice these weekly bull flags, right? So these are all like potential entries because they're weekly flags. And they're just continuations of this major flat base breakout. So then if we go to the daily, so really the wedge pop starts down here on the weekly. So wedge pop, unfilled gap, on volume. Like for me, this is not a stock that's on my radar, like a NVIDIA or Tesla, I might catch this, but kind of a secondary name like this, I'm not going to be on this. And then what do we get? We get the cross back in here. So we're finding support on the EMAs. You get a little doji here. These are all little spots you could be trying to accumulate. And then at 3, it triggers and we trade higher. And I can tell you, I had this trade and I actually got out of it in here. It wasn't like a huge trade for me, to be totally honest. But it just goes to show you, it's like a 12% winner or so. And it's over the course of like 6 or 7 days. And it's really a trade that like didn't work. But then there are alternative entries here that work a lot better. So at 4, this is the wedge pop. And then you get the cross back here. This is a flag. And we go up, you get the basin break here, and we go up, and this is the trade that really, really, really works. So, don't always give up if it doesn't work the way you want the first time. And like, somebody using the 50 SMA, because I know somebody's going to say like, oh, if you use the 50 SMA, like you wouldn't have shake it out. And it's like, yeah, I got you. But basically, stay on these things because this second trade like really, really, really works. To the tune of like a 40 or 50% gain. Um, and then what ends up happening at the end of the move? So we get extended, and I talked about kind of failures. So this pattern here, it's not something you would want to buy, but it like, I see the little base, but it doesn't follow through, right? So that's just kind of like a subtle sign. Okay, buyers are being less aggressive up here. And we come up and we kind of reverse again. And to me, it's like, okay, we could just be building a bigger base to break out, right? But what happens? We fail here. So that's like another sign, kind of your second sign that something's up. And then really it's still fine through here. Like still thinking this could just be basing and it's going to go again. But then we get the wedge drop, and that's the end of the trade. So if you took some off into strength or whatever your play was, and you're out of it probably around this 118ish. If you didn't sell till here, call it 115 area. And let's say you got it in here, you're having like a 30% gain in, what is that? It's about 6 weeks or so. But just goes to show you, these things don't always happen perfectly. So this first trade, wasn't exceptional, but the second trade really was. And if you had both of them, you got a 12 percenter and like a 30 percenter, give or take. So big weekly flat base, and then work the cycle, work these individual patterns, to just get on board and catch these trades.
And Oliver, I'm kind of looking at the weekly chart here, and it looks like when it gets to the top where it ultimately fails, it looks a little bit extended from the 10 EMA. And also looking at that top, we've got an inside week that then it tries to push to the upside and then reverses down, and then we get that big fall through. So that's really what stands out to me looking at the weekly chart.
Exactly. And that's something I'm looking at too, right? So if you just kind of look at this weekly, as Richard says, we're extended from the 10 week. And then this is almost kind of like, I would have a line drawn here, and this low right here is very important. And the reason being is inside, failure to the upside, and if you trigger to the downside, that's a negative sign. So this low coincides with the wedge drop, and to me, that's why you really get a sell off.
For sure. Let me see if there's any any questions. Did you say that the first wedge pop is too risky for this name? Is that something you said? Yeah.
No, it's just like for me, I'm like, look, I have my like go-to names like
Yeah.
Nvidia, Tesla. LSPD for me is not like that go-to name. So for me, this really came on my radar right in here when I saw this tightening action above the 10 week and building under this line right here.
Yeah.
So for me, like, look, if you were watching this and this name, this could have been an initial entry.
Right.
And really, if you took this, you probably would have been able to hold through this. For me, because my buy was later, like I don't want to give back all my gains. But then you can kind of just, get back on when it reconfirms. And I just, this isn't a name that I watch regularly. It
Right.
showed up on my scans, and um, so I didn't catch this initial pop. I caught the later move.
Perfect. Let's see. I see another question about what does Oliver consider extended from the 10 week. If you want to answer that quickly, that's fine. But also, we went into that pretty in depth in webinar one. So definitely go back and watch that one.
Yeah, I mean,
Um,
just look
yeah.
at the air here. So, like, think about the personality of this stock. It's actually like stair stepped up the 10 week for, since June. And then it accelerates, and we have a lot of air between the 10 week. So it's showing a change in character. And that's actually fine if it based here and continued higher, like it
Right.
could maybe go even higher. But it fails in, you know, therefore the extension mattered. And you see that failure here in the daily, and then it confirms on the wedge drop here. And, to me, when you have a wedge drop extended from the 10 EMA, at a minimum, you should expect it to probably come back to the 10 EMA or the 50 SMA. And I'm the type of trader, like, I don't want to give back 12 to 15% of my gain.
Right.
So I'm just going to check out.
Perfect. Yeah, I think we can move on to the next example.
All right. So Sprout, this was another one that built literally at the exact same point in time. Um, and basically multiple week flat base. So this kind of has it on your radar. Notice the inside week. I know we've talked a lot about inside bars on the daily, but inside bar on the weekly, very important to highlight. And I really just wanted to show this buy area because this kind of shows how that little mini flag or consolidation builds right under the weekly level. So big weekly pattern, smaller pattern within a pattern. In reality, the wedge pop was down here. To me, there's not really like a pivot here, so it's not a trade I would have been in. But this is the crossback, which is often what happens in these big weekly patterns is you'll get the crossback tightening right under the pivot point. And what do we see here? We see this tightening action. We see a little shakeout here on the low, but it's really like right into the EMAs. And then when we trigger upside, that's your buy area. We close the high of the day. Your stop would be right here. If you want to give it a little more room, you can put it down here, but I can just tell you I'm putting it right here. And we follow through. And this ends up being a really, really nice trade. But this is the type of action you want to see. Contraction and volatility, EMAs catch up, they show support for the stock. And then when we break out, it's a low risk entry here on this bigger pattern. So this is a great example of pattern within the pattern, understanding where we're at in the cycle, and executing.
Let me wait just for a second to see if there's any questions that come in with SPT, but I don't see anything specific on this one, so I think we can move on.
Okay. So here's a trade that I had last year in Chegg. And this was a BGU right here, Bible gap up. I had never heard of this stock at all. So this is when this showed up on my radar on my bull snort scan, right? Big gap up equals the streets caught off guard. Unfilled gap equals strength. So at this point, I don't think I saw this until it was like up here. And this to me was like too extended of a pattern. If it had based out another couple of days, I probably would have considered taking it. But wasn't on this. But I had it on my bull snort list, and I just kept watching it. And 1, 2, 3, 4, I don't know, it's like 5 or 6 touch points, but it's around that like 6 touch point. And what ends up happening right in here, we sort of start to build like a little basing area where you can see that we're kind of just trending lower and lower highs and lower lows. Support bar here, rejected, not quite ready, kind of shakeout bar here, not quite ready. And then we really build this pivot here at $60. And it's not perfect, but got involved in this in here. So you can see descending channel builds over multiple weeks marked by lower highs and lower lows. Notice how we see 5 to 6 bars of tight action, basically just showing a change in character here. A small shakeout to the pattern where sellers are unable to push this thing lower. And then, as I said, with most descending channels, this is a wedge pop, back up through the EMAs. And then we get an EMA crossback right here in the form of a bull flag. This is not the perfect bull flag, but you get this little hammer candle, and it works pretty well. And then we move higher, first sign of distribution here. So this thing's getting looser. I probably wouldn't buy this basin break for an initial position because of this too. And then as the move ends here on this wedge drop. And notice again here, what do we see? We see a failure higher on, a late stage bull flag. So, I said like careful buying, later stage patterns, and understanding where we're at in the cycle. Wedge pop, cross back, this is sort of like the basin break right here. you want to be careful buying this stuff. And when we see this failure, that should be your first aha, what's going on here? Red flag. I want to see this follow through tomorrow. And what do? They gap it up and sell it. So to me, I'm selling this bar right here, even though technically the wedge drops here. When they gap it up and sell it and take it from green to red, you want to be getting out of this thing. So this is about, depending on where you get out of it, let's say you got out down here, it's about like a 25% gain. If you were a little more quick on the trigger, it's about a 45% gain or so in 6 weeks. So these are the types of trades that if you compound them, they can really help you move your account.
And we had a question about the bull flag at point number 3. As the stock is breaking that pivot, where are you looking to enter or add on that specific day?
So for me, because this thing's kind of sloppy, I'm probably not.
Okay.
But really, I'd probably, knowing how I trade, I'd be watching this hammer high here and probably trying to get it on this day. But I would have looked at these bars and said, I actually no, I had it down here, and I was looking at these and I was like, oh man, I hope this thing works. And then when we triggered this hammer, I actually raised my stop to here. That's how I treated this crossback. Is when we took this out. Even here, I was thinking like, oh, this might roll because it's kind of squatting on this hammer after these pullback bars. But then it works. And even here, I was thinking kind of the same thing. This happened real quick because this is kind of a thinner stock too. And I was like, well, I hope this thing works. And we held the 20 EMA, and I raised my stop. I raised my stop again here on this bar. I raised it here, and then I got out in here.
Perfect. And we had a question earlier that I think would be good to bring up now. I forget who it was who asked it, but they pointed out that sometimes you draw descending trend lines, sometimes you like flat lines. Can you talk about kind of how you draw those and your thinking process, your thought process behind that?
Well, I mean, I draw a descending trend line here because the price action is moving down, and I kind of just see this channel. This is kind of a loose pattern. It's not the best way to draw it. Whereas this is horizontal because the price action is horizontal. So the price action to me is determining how I draw the lines. And look, there's an art to this for sure. And I've looked at a lot of charts, and I've lost a lot of money learning how to just spot these. There's a creativity factor to how you look at charts. I don't care what anybody says. Like, not all these patterns are like perfect and easy to see. And the more practice you put into it and the more charts you look at, you're going to get better at being able to, identify different patterns. And literally, like I'm telling you, pay for Dan Zanger's thing. He's got letters back to like the early 90s. And if you really, really want to learn how to identify patterns and you're willing to put in the work, go through, because I've done it. Like, I was a subscriber for years, and like over the course of years, I probably went through like thousands of his letters. And if you do that, you'll learn how to better identify these patterns, and then go through all the biggest winners of last year and go through the names that have worked this year and trade them. So like, one thing I'll do, which I'll show you after, is I will set up my Thinkorswim where I can like see the bar, and like I'll mentally trade like stocks that have already happened. And it's not perfect because, I kind of already know what's going to happen, but I try to be honest with myself and how I would, execute my rules. And I take them bar by bar, and I mentally trade them after the fact. It's a great way to practice and just get mental reps.
Perfect. And yeah, I think that's great. And there's a question, what letters? That's Dan Zanger.
Yeah, chartpattern.com. I don't subscribe to it anymore just because I do most of my own work, but I think Dan's excellent at identifying patterns, and really he's had a major influence on me. So, highly recommend you do that if you're, I just recommend it for sure. Doing that study and taking it from looking at his letters and then going through and doing the work yourself too.
Perfect. And going back to my question a little bit about descending trend lines versus flat lines, it's also about kind of pointing your eyes at the spot where the character change would happen a little bit, right? Because with a descending channel, you're looking for the break of that drift lower, while with a horizontal, like higher up on the chart, you're looking for it to break that resistance level. So that's another way to think about it, I think.
Yeah, and so like think about how this channel builds. Like honestly, right in here, this to me is just slop.
Yeah.
It's just pure slop. Really, where I probably, and I can't remember exactly, but when I saw this bar right here, is probably when I started like noticing a potential pattern. And then definitely right here, I probably had my channel drawn and I had my
Mm-hmm.
pivot right here on the wedge pop. So you're not always going to identify the pattern. You might identify it sort of near its completion, but that's okay because this is really this type of action here. Like, look, you have like a 1 bar shakeout. Like, you're not going to buy that, or
Mm-hmm.
like, it's just not ready yet. But when you see this type of action, that's really where the pattern comes together. And so, like, a pattern can be nothing, and in the course of a day or two, can completely like transform and build and be ready all of a sudden. So a lot can change in a day or two, and that's why you got to do the work every single night.
Perfect.
All right, so what do we got here? So I wanted to show a weekly chart, because I know a lot of people say they work and they can't trade, and I personally actually sort of think that's an excuse, but I also think that you can trade weeklies, and I'm personally trying to move more and more towards weeklies, um, just as my account gets bigger and such. But this stuff works on every time frame. So I wanted to walk through this weekly on Peloton and just kind of analyze it. So at point one right here, we have a shakeout on the lows, marking the 2B reversal. And this is really an IPO double bottom base. Notice we're past the 6 month lockup period, which to me is kind of that point in time where I think an IPO can really start to work. Um, right here is actually where we have the wedge pop. Um, me, I just kind of wasn't really on it yet. I got on this at like $28, I think, if I recall correctly. I think I actually bought it here, got stopped out, and then got back on it. But basically, at point two, you have two tightening inside bars on the 10-20 week EMAs right at the top of the weekly resistance level. So wedge pop, EMA crossback. That's what this is, right under this level. And we break out, right? We go up, and what do we get next? We have a basin break in the form of a bull flag. Maybe this is more of a flat base because it's 1, 2, 3, 4. It's like 4 to 5 weeks, give or take. So we have a flat base, bull flag, whatever you want to call it. Don't get so like caught up in the names of the patterns. It's more the volatility contraction that we're paying attention to. Um, and actually, this could, even if you look at the daily, it looks on the daily, this was like cup and handle. If you were to go look at the daily at this time period. So think of it, flat base on the weekly, cup and handle pattern within a pattern on the daily. And we take this out. What can you do? You raise your stops here, right up that 10 week EMA, and we continue higher. Then at point four, another multi-week consolidation as the 10 week catches up to price. This is nearly an identical pattern. It's a little looser because it's getting later. So this is like your first, I kind of think this is like the first stage pattern all in here. And this is the second stage base. So on the daily, this is like a cup and handle. And it really is kind of here in the weekly too. And we trigger it. And so this is your second stage base, right? So we're getting a little later in the basing process. We go up, we have an inside bar here at 0.5. When we take that out, for me, I would raise my stop to here. And really the way I trade, especially on the weekly here, you're getting extended, and you might want to think about locking some in because you're getting real extended. This wick here, when you're extended from the 10 EMA, is often a sign that this thing's getting a little bit exhausted. But this is technically the first extension. On the daily, I'd probably hold through this, but on the weekly, I'd like to take profits and kind of check back into it. But just for the sake of following the rules, because I'm understanding, this may be for somebody who is working all the time and wants to trade the weekly exclusively, maybe you hold through this. But I want to highlight something here. So we've had our first stage base super tight, second stage pretty tight, right? What are we seeing here? We're starting to see the price action get wider and looser. This is a third stage base. Maybe you say 1, 2, 3. Maybe you interpret this as a fourth stage base, but either way, it's not a first or second stage base, and we're starting to see the price action loosen up some. So at 0.7, I say notice how it's much deeper and looser than the consolidations at 0.3 or 4, often a sign of a later stage base. So just recognize that when you start to see these weeklies loosen up, you're getting closer to the end of the run. And then up here, we get our second extension from the 10 week. So just I know people are going to ask, so we have air here and we have air here. And to me at this point, like, you're still okay. We pull back. That's okay. Stocks pull back and we get supported, right? But at 0.9 here, this is a failed breakout to me, because we take out this high and we scum lower. Now, are you going to run out and sell it? Maybe not, but we support the next bar, so you're still okay. But to me right here, when you get this bearish engulfing, so couple arguments, right? Wide and loose, third or fourth stage base. So we know this base is already really late. Like, we know that because we see the volatility increase here. And then we're seeing buyers unable to push higher in a late stage base. And when you get this bearish engulfing, to me, you're really trading on borrowed time. But what happens? We get 2 inside bars. So it's like, oh, maybe we got a shot here, right? But then what happens? We get that weekly wedge drop, and it's confirmation of kind of the things that we are. So first suspicion, second suspicion, third suspicion, confirmation. And this trade comes apart. And look, you could have traded this weekly. Let's just say from $40, and we'll say that you sold it late and you got out at like 130. You could have been working a job and updating your stocks, weekly, and raising your stops higher. Nick Darvis, that's probably what he was doing. He was doing things 3 days after the fact. And you were able to catch a nice move of about 300% in a growth stock playing the weekly chart. That's pretty good. So, using these weeklies, all these tools work, all the inside bars, the wick plays, all this stuff works on the weekly. And if you're worried because you have a job and you can't, watch the market or whatever, trade the weekly chart. I'd probably make more money if I traded the weekly. So this stuff works, and I wanted to show this example to highlight that. And I could go through all the big winners. You'll see this stuff works on the weekly chart, and the 10 week and the 20 week. It just flat out works.
Would you handle your initial stop loss any differently on a weekly chart? Because often the ranges are wider than the daily, of course.
Well, so that's the thing. When you're trading a higher time frame, your stop is going to be wider, but the rules are the same. So the rules are the rules. Like, you're going to buy this breakout and your stop's going to be down here. So your stop is naturally going to be wider because you're trading a weekly bar, which is why I like to, execute on lower timeframes to manage my risk. But, another thing my mentor has said to me is, we want to enter like a day trader and hold like a position trader. So really is what I try to do is enter on lower time frames, and I'm moving towards, trying to hold more based on the weekly. I'm just, I'm progressing myself as a trader. I'm trying to get more comfortable with that. But yeah, you might have to take a little bit of a smaller position, but maybe because you're not watching all day because you're at work and stuff, maybe that's okay, right? But maybe you do what a lot of people do, and you see this big weekly base and you manage your risk on the daily, maybe not the intraday, but maybe the daily, and then as it gets going, you start managing it on the weekly.
Perfect. Yeah, I think that's a great example for people who can't be in front of their screen every single day. I think that's great.
Yeah. And really, it's a good example for people who can be in front of their screen.
Yeah, you're right. You're right.
Yeah. Okay, so I wanted to go through that, and to me, this is like a vanilla growth name. Obviously, Peloton's kind of fallen apart at this point, but it really wasn't any surprise. I mean, if you read How to Make Money in Stocks, this was routine. It got to like that fourth or fifth stage base, and it fell apart. And what's the line? I can't even remember. 80% of stocks fall 50%, 50% of stocks fall 80% or whatever.
Yeah.
So, I know a lot of people were holding on to Peloton for dear life or whatever. Um, just, follow the rules, whether you're trading the weekly or whatnot. Not all stocks go to the moon, and just recognize that, because I can tell you over the last 10 years, I mean, there's so many stocks that I thought were going to be like the next Apple or Tesla or whatever that have literally gone to zero, and they don't even exist anymore. So follow the rules, and you can do pretty well. All right, so I want to look at more like a high flyer type stock, where to me this is more like a swing type stock. It's a little more speculative to me. That's just my opinion. But Lucid, so this is one. It had a major basing pattern. This is almost like a turnaround pattern, because it made a big move here. Now notice, like in here, how it's only had, maybe, what is that, like 6 months to set up, and it fails. So like when you get distribution like this, you really, really need like a significant amount of time to base out. And really it makes sense when this eventually broke out, because it broke out around the time that they were getting ready to potentially show some deliveries for cars, right? So it breaks out here. This was not on my radar here at the breakout, but it showed up on a bull snort scan. And then what do we get? We get a little bull flag. This to me is technically not an inside bar here at 2, but it's inside bar-ish. I don't know if that makes any sense, but it's kind of, similar.
It's in the spirit of an
It's in
inside
the
bar.
spirit. Yeah,
Yeah.
exactly. And I find that these kind of more high flyer specky names, once they kind of go, I'm noticing more and more they will hold the 5-day. This is kind of one of those things that I'm experimenting with more. But basically we trigger here, your stop would be down here. Notice the volume dry up here on this bar, extreme volume dry up after the volume, declining volume in this bull flag here, and then an expansion of volume as we break out. And just to take it a step further, so we've seen the weekly break, found it via the bull snort scan, see the bull flag. We identify this as something we're interested in, and then you can kind of zone in and see the hourly, or some people use a 65-minute or a 78-minute. I think those are all very, very valid. And when you break this level, you're just basically zooming in to kind of see a tighter level, versus what you see on the daily chart. And we go higher, and you can treat it as a swing and sell into strength, which I personally think in some of these more names like this, it's better to do that. But who knows? This has earnings next week. Maybe it explodes higher. I'm not really comfortable holding stuff like Lucid into earnings. But either way, I just want to show the entry, and everybody's going to be different, kind of how they treat it after that. But any questions on this example?
Let me check out if we have any questions. And this is another good example of an outside reversal bar, as it broke through there. Actually, if you go on the hourly, I was talking about.
Oh yeah, so on the hourly, this is an outside reversal. I don't really use this as much on the hourly, but technically, if you look at the hourly, right, pull back, and we take out this low and come back through it. Knowing how Lucid trades, this happened very quickly.
Yeah.
So I got it up here. I did catch this one.
Perfect.
Yeah, didn't trade it perfectly, but I got the initial entry.
And there was a question about, somebody wanted clarification on the pivot for the bull flag. So maybe if you go back to the daily time frame and talk a little bit about what the pivot is for that type of setup.
Yeah, so for me, I saw this little hammer here, but I didn't like this gap down here. I don't like unfilled gaps. So it filled it, and I was kind of watching it. But then when I saw this volume dry up here, in this bar, I felt like it was an area because of the dry up that this pivot was relevant. And then kind of looking at the hourly, this wasn't perfect, but I felt like there was a pivot here. And really, I was watching this because of this volume dry up in the tight range of this bar. And I felt like if we took this out, I could have for this stock to get on with a 4 or 5% risk. And really, once it went, I was using this pivot. I'm just being straight. I was not going to hold this if it reversed back through 38. But you get about 4 or 5% risk on this in a name that moves like this. That's pretty good. So for me, this bar with the dry up on the declining volume, that to me is where I felt, hey, this is a pivot I can trade on. Whereas right here it worked, but I didn't like the gap down. In retrospect, the buy area was like right here. I just wasn't comfortable playing it there.
Right. And this is an example of a stock that would have shown up on the bull snort scan because of that.
Exactly. Yeah.
Yeah. Perfect. Let's see. Um, I think we can move on. I don't see any super specific questions about Lucid, so I think we can move on to NVIDIA.
Okay, so NVIDIA, I just wanted to show this. So we got the weekly bull flag right here into the 20 week, right? So, as Memento calls it, this is like a 1, 2, 3, 1, 2, 3. Um, and then on the daily, it's setting up right here. Um, and I actually bought this on this day right here at 1. So this is like a flaggish type pattern with 2 inside bars. So inside bar, and look at this volume drive in here. This is like amazing. So we sort of saw buyers push up here and show like, hey, we want to hold this here. And then we get this little flag type pattern with drive. I bought it here and I added in here. Um, and then you get the EMA cross back at 0.2 into the daily 10 EMA with back-to-back inside bars. So again, inside bars. And then you get your weekly level up here. This is where you're clearing the weekly level. You get an unfilled gap, and then this is that wick play right here that I showed earlier, which to me, you could add here because it's the wick play. And so the way I played this, actually, I didn't play this perfectly. I had it perfect here, and I took some off here because I was pretty heavy in AMD and I liked it better. But then I saw this and I got back on. But really, the way to trade this was to buy it and hold it. But this wick play, I think, was another area to add, even if you bought here, because it's the wick play. Like, I think the wick play is unique, whereas normally you probably just want to let it trade. And then I personally thought this was a blow off exhaustion because this volume was so massive, and I sold into this. But I think is what we're seeing now is this is consolidating pretty well. I don't regret selling it because it has earnings on the 17th. And, I don't love to hold into earnings if I don't have to. So right now, I think earnings is going to be the next move here. But this trade, call it, 215-ish or so. I think you could have got it at 210, but 215 to say, 300, give or take, in, I don't know, less than a month. Like those are the types of moves I'm looking for. So this was a great opportunity where it showed tons of different examples. Inside bars, volume dry up, wedge pop, EMA crossback, inside bars, kind of a pattern within a pattern right here at the weekly resistance level. All of this occurs on a weekly bull flag into the 20-week EMA. Wick play. And then to me, so this is kind of like your base and break. And this, I think, is going to prove to not be the blow off in, a week or so from now. But at the time, I think it certainly looked like it to me, at least. And that's the trade, and that's kind of the full cycle. So that's a lot of examples here, a lot of things to study in here that I think could help give you an edge.
Perfect. I don't see any questions specifically about NVIDIA. So yeah, I think we can move on over.
Okay. All right. So another one here, Airbnb, and this has progressed further, but I just want to show this weekly, and this is primo for what I talked about. 6 to 18 months, 24 months on an IPO. These are definitely the best types of initial patterns to play, in my opinion. On the weekly, we get a wedge pop, and then we get an EMA crossback here, and this is an inside bar, and then an expansion breakout on volume. And so, what do we see on the daily? We see a flat base, 200 SMA, 50 SMA right under price, so it's not extended. The one difficult thing here is it technically breaks out the day of earnings, which I'm not going to buy something, right into earnings, or if I did, I might buy like a 1/5 position or something. But to me, this is a really legit BGU, Bible Gap Up, in the sense that there's volume in the post market on this thing, and it's breaking out of a huge weekly base, and it's also a stage one base. So that's key. It's a stage one base. The earlier in your staging cycle, in my opinion, the better off you're going to be buying a viable gap up. So big base, viable gap up, and since then this has consolidated and headed higher. So a couple things here: 6 week flat base on the daily. We clear a descending trend line, but it's still within this basing pattern. It breaks 174 and then 177, which is the weekly level before earnings. The one thing I say here is notice this subtle unfilled gap up as a tell. So these are like little things that most people don't notice that are very, very, very meaningful. Very meaningful. If you go back and study tons of winners, you'll see little things like this all the time. Massive Bible gap up. And what do we have? We have a catalyst on earnings, and we have enormous volume. And I personally think that this thing is going to prove to be, one of the big leaders over the next, 3 to 6 months or so.
Yeah, I think this is one we should definitely go ahead and look at live in TOS once we're done with these examples. But let's see. Any questions? Oh, here's a good one. Thoughts on the left side of Airbnb within this stage one base? Because you do see a lot of distribution there on the left-hand side.
Yeah, you absolutely do, and I think that's very common when with these IPOs, which is why, like, I know a lot of people were trying to buy Airbnb in here and stuff. Like, trust me, I saw it all over Twitter. Everybody was trying to buy this stock, and that's why I like to wait till after the lockup, because you're going to get a lot of people unloading their shares. This thing, if you think about this, I can't remember what the market cap was when it came public, but it was pretty big. So you had people who, like, their life changed. They got into Airbnb early, and they were going to take some off the table for sure. Facebook did the same thing. I want to look at Uber when we go live too. I think Uber could potentially be setting up for a move. And a lot of these, bigger cap type names, you're going to see this until you get through the lockup, and oftentimes even for like a year. But I think since they're stage one, I personally think that Uber is going to work through this pretty quickly. I think if you got another consolidation up here in this range, it could really be a gift to get on, which I'm hoping we see that. But I think Airbnb is going to go right through this. I think this is natural action for an IPO.
Yeah, and you can see the character change in the volatility of the price right there. It's wide and loose there, and then it tightens up after the reversal extension downtrend type thing, and then recently in the flat base it got super tight with it finishing off with the inside week, so you can really see nice character change there.
Yeah, I mean, if you think about this on the weekly, like we had a wedge drop here, so this is a wedge drop, and to me this is just like an avoid, like it's a total avoid. I did actually try this in here on the daily. I thought it had potential to work up, and it didn't work, so then it was just like an avoid for me again. But then once we enter the up cycle on the weekly, if you think about this, here's the extension, here's a higher low, here's the weekly wedge pop pivot. We trade through that, and then we tighten on the cross back into the 10-20 week EMA. And on the daily, this is such like a nice pattern. Like it's big, It's into this 200 SMA. You can see the 200 SMA supports it here, here. And then when we bust out of it, the volume here is massive. So, you know, I hope we base here and make a handle at the top of this pattern. But my hunch is this is going to go right through it.
And you've got volume declining within that flat base too. It's pretty textbook.
Exactly. If you look at this volume here on the weekly, look at these weekly volume dry ups. Um, it's really, really, really a nice pattern.
Perfect. Is this the last example, or did we have one more?
There's one more. So I wanted to show ENPH. So this was a solar, and solars were really out of favor all last year, and it had a big cup and handle. You'll see these low handles a lot of the time, like cup and kind of declining handle. So this is really a descending wedge in the form of the handle. So it's pretty clean pattern. And then what do we have on the daily? The wedge pops here, the cross pack. That also marks the breakout of the cup and handle down here. So this is actually technically the breakout was like down here on the daily. But this really wasn't on my radar here yet. Um, I would highlight this handle as a low handle in the form of a descending wedge pattern. I already went over that. So then you get a base and break, but we have earnings coming. So like I'm generally not just like getting in something like this on earnings. But this thing had volume in the post market, and it basically was a BGU out of this cup and handle, and basically just wanted to show this because this is the type of pattern you want for a viable gap up. Like you want a big pattern. Like these are the ones that are going to work the best versus just, some little bull flag or something. Might work, might not. But I think gap ups out of these bigger patterns are the ones to pay attention to. So it had a catalyst, enormous volume, and it's trended higher. So at this point, if you didn't get this, you just want to wait for a sec. So this would be a first stage base. It'll make a second stage base at some point, in my opinion, and you can hop on it then.
Would you consider this one to be a top dog right now? It also has those earnings and sales numbers backing everything up.
Yeah, I mean, I would say it's my favorite solar because I think it's the least it's the cleanest. This and Sedge. I just don't
Yeah,
really like the way Sedge trades. But I think First Solar is a name people try to trade. I think it's a dog in the solar space. I think it kind of gets dragged higher. It's got so much resistance to the left. Um, what's the other one? Sun Power, sort of same deal. Nova is a younger one, but it's just kind of hasn't shown the same strength. So I think that this is the leader of the solars. So I think it's the top dog in that space. Like for me personally, like I get more excited about something like an Airbnb, or like a Roblox where I just feel like I think the product's really cool.
yeah,
But like with this type of pattern, like I definitely think this is, one of the top names to be paying attention to.
for sure. All right, let's see if there's any specific questions on EMPH. But if not, I think we can kind of move over to TOS, look through some charts live, and also just take questions along the way. Um,
Okay. All right, let's do it.
yep.
Hold on. So yeah, you see my screen, right?
Yeah, and also, do you want to kind of talk through your layout intraday? Because I know you wanted to cover that, how you use different time frames, all in one.
Yeah. So really, the way that my screens are set up is I have three screens. So on my left screen, here I'll just show you my different screens. So we'll show screen three. So here's one of my side screens, and you can see I just have the normally during the day I'll have like the daily and the hourly, and I'll have like a stock here, a stock here, and then I got another screen on the right, and I'll kind of have the same thing. So I've got like four stocks that I'm trying to pay attention to. Then I've got my focus list, and when I'm really watching a stock, really is what I'll have on this screen is I'll have my 15-minute time frame, my hourly, and my daily and my weekly. I am trying to kind of step off the intraday stuff as much, like the 15-minute, and I'm trying to transition more to like an hourly and a 4 hour.
I
Um,
Oliver, I think you might have to switch back your screen.
oh,
Yeah,
sorry, hold on. So
all good.
basically, you see this. So I've got two screens like this, and it's usually like the four stocks I'm watching, or if I have a big position that I'm already in, I might have it on one. And then my main screen though is right here. I've got my watch list, so like my owns, my focus list, and then my different lists, names that had earnings or something, or my bull snort list, or my daily list. And I'm kind of just watching my focus list midday. I'm scrolling through all these names, stuff I talked about last session. But I've usually got the 15-minute here at the open, and then is what I'm trying to do is I'm trying to train in the hourly here, and is what I'm trying to do is I'm trying to transition more to like longer time frames, because I'm trying to cut down on how much I trade and focus more on the big moves. That's kind of an adjustment I'm more making. So I'm trying to actually change my lowest time frame to the hourly and
Hmm.
incorporate the 4 hour. And I still think like the hourly, like for example, UPST, I didn't take this, but like you see this trade off the low here, and like maybe you get in like 2 points lower if you're looking at like the 15-minute or something. But the thing is like you're going to see a lot of more false signals on the lower time frames. And I think if I can take less signals, I'm going to make more money. So basically during the day, like, this is the type of stuff I'm watching. Um, Actually, I usually go to this lower time frame daily, and I'll be zooming in and looking at different patterns, and I'm just like scrolling through this stuff like all day, and that's kind of what I'm doing during the day. Um, so yeah, that's kind of what I'm looking at.
And for a name you're watching or the ones you're focused on for that day, do you have alerts set that kind of trigger, and then you look at that chart? How do you manage like looking at multiple stocks at once?
Yeah, so I have alerts set, and I kind of know the names I'm focused on. So, for example, here's Sophie. This is a name that I'm real focused on right now. To me, this is like a stage one base. It had earnings. I actually bought this and got stopped out, and I bought it again on Friday. And I'm looking for this to turn up through this high and trigger. It reminds me a lot of Asan when Asan had its. I showed the Asan example when Asan broke out of this big base. Right in here, it gapped up and pulled back and then went. Sophie sort of reminds me of that. So, for example, like I know that I'm watching this; it's a focus for me. Um, so alerts maybe, but it's more that I'm watching like a couple different names, and I kind of know what I want to do, and then I'll have alerts set all over the place on other names that maybe aren't a focus for me, but if they trigger a certain level or something, I want to make sure that I'm involved in them for sure. Um, so like for example, right now I'm really focused on this Sophie.
Hmm.
I'm focused on this Docs. I think there's a potential for a wedge pop here through 77. um, I'm really interested in this Uber and Lyft. Like I think if you look at this weekly, I had this here last year and it just never really worked. But I sort of think with the way Airbnb just worked, and with the way this Uber's setting up, and I also think Lyft is potentially setting up, and they're kind of these younger type IPOs. Like I really like catching these, first stage type patterns. I think that this is one that's kind of in focus for me. It held last week's low, and we'll see if we can turn up out of here. Um, so this is an example of a situation where maybe it's not quite ahead of the indexes, but I think sometimes these IPOs, when they're in that initial first stage base, they kind of almost march at their own beat. And then when they're ready to go, you want to see the volume come in big time. Um, some other stuff I'm watching. I know Nvidia has earnings this week. It's a focus name for me. I pretty much always watch Tesla and Nvidia. They've kind of been out of favor here, which is fine, but I think they'll come back. I'm keeping an eye on this Pub M. Same deal. It's like a young name, so like I like that it's young. And it had a bull snort, and it's kind of trading inside. I would love for this to put in another inside day and then go, but keeping an eye on that. This newer kind of same deal, big, big, big bull snort out of a huge base. Like, look at the size of this base.
Yeah.
So this is the changing character that I look for. And now, I mean, it's almost like too extended. Like, I would actually like it to base more, but the thing is, look at how much volume, and then look at the dry up, and it's inside. So, we'll see what it does here. But yeah, I mean, this is the type of stuff I was able to catch net Friday, and I sort of think D Dog and net and some of these data stocks have shown great strength. Like, Snow's been a nice one. These are the types of stocks that I'm seeing that are kind of standing out. So they're kind of the names that I'm keeping an eye on going into Monday. But really, Sophie's a key one for me because I just love the story. I think it's big. I think it's stage one, and it's exhibiting basically what I saw in Asana. So I want to, see if we can U-turn right here and go higher. Same deal with Docs. I view it as like stage one potential wedge pop. Whereas if I can get into it, I can catch like a real move. I think we're seeing a whole new crop of leaders kind of start to lead the market now. You get your Airbnb, you've got your you've got Roblox, and kind of like last year we had like the quote unquote COVID names. We had the Pelotons, the CrowdStrikes, whatever. Um, I think that these new names, whether it be like the Metaverse or whatever they are, um, or the open up plays. I don't know if Airbnb and Uber are so much actually open up plays as they're just like new companies. But these are the types of things that I think have the potential to lead the market. So that's kind of what I'm focused on. I know a lot of people are obsessed with UPST. I still like it. It's down into the 20-week EMA, but I think it's going to need some time. So I'm fine getting back in it at like 350 or so higher. But I'm keeping an eye on it here. I mean, it could set up a bear flag here and tank. Who knows? But my hunch is it's gonna go higher and probably chop higher. And so I'm just kind of keeping an eye on it. Um,
Could you
yeah,
go? Could you actually go through how you built a position into Roblox? Because I think that's a decent example of how to trade these earnings gap ups, and also how difficult they can be. Because this really kind of shook some people out the next day after that gap up.
yeah, me being one of them.
Yeah.
So I got on Roblox on the gap up. And really, a lot of my other positions did real bad on this day, and Roblox kind of carried me. And then I like gave it all back. It sucked, and I got stopped out. Um, and then basically in here, I got on it again on Friday, and really is what I would love to see from Roblox. Because I only took a 10% position here, and I really think that I should have a much bigger position. I think that I would love to see it do something like this,
Hmm.
where I can add to my position and raise my stop up to somewhere in this area. I don't know if that's what it's going to do. It's really it could just follow through higher, or or given my relationship with Roblox, it could just like tank and stop me out again. Uh,
Yeah.
but but uh, but yeah, I mean, this was the play. Like I thought this BG was going to work. It didn't. We undercut this low, and notice how we traded back above it.
Hmm.
Um, and then we had an inside bar here, and this is like a bull flag. And when we took out here, really, I bought this on the open pretty much. Um, but this was the pattern right here. And we'll see what happens. I really would not want it to lose 100 again, but the stop level is 96.75 or this low, 96.85, I guess. Um, but I'd love an opportunity to be able to add to this before it really really gets going. So some people will look at lower time frames. I more would rather see like the daily build a spot. But we'll see what happens, and we'll play it as it lies.
Perfect. I think that that pretty much covers what we had prepared, but I think at this point we'll just open it up for questions. So if you have any questions about what we've covered today, setups, entry tactics, keep in mind that we'll talk a lot more specifically about position management, stop loss management, risk management, and general position sizing in next webinar and the one after that. But if you have any questions whatsoever, we're happy to answer anything you have.
And actually, Richard, I wanted to show a couple examples
Oh
of
yeah,
like faulty bases because
right.
I think it's real important. Like, we all talk about recognizing bases that are going to work and stuff, but avoiding faulty bases can help you, avoid getting smoked.
Right.
Um, so I'll look at a couple. Like, I know this snap is one that caught a lot of people off guard. And I want to point out what I interpreted to be some flaws and why I actually got off this stock. So it really broke out, down here. So this is like the IPO base. It goes up second stage base, third stage base. To me, notice how it's getting real wide and loose here in this
Mm-hmm.
weekly bar in particular, and then it sells down. But that's okay. Like the market in February and stuff was terrible, and in reality, it kind of held up better than a lot of other growth names from last year. Um, but to me, the real red flags occurred in here. So this bar right here on volume, like, look, this was a gap up on earnings, and normally you want to see this and you want to see it follow through higher, right? Um, but I'm just going to zoom in here so that I can look at the volume in this base. So selling volume. Right here is like an outside reversal to the downside on volume. More distribution volume in here. More distribution volume in here. More distribution volume in here. Look at all the light volumes on the green bars, all the heavy volumes on the red bars. This is like more distribution volume. One thing Trader Florida taught me is usually a stock or the index will give you 3 to 4 chances to get out. Like, stocks don't just fall apart, contrary to what people say. So it gave you so many just like signals that it was being distributed. And the last time I played this, I think I played this in here or somewhere in here. I'm guessing it was here. And I started to say, you know what, the evidence when I saw this is just too much that this thing's getting distributed. And I stopped trading it. I didn't catch this or anything. But this right here is what I call like the dagger. And I'll show you another couple examples of other bases where you see a failed breakout followed by massive, to me, actually, this distribution wasn't as heavy as I thought it was, but it's the action in that you get a breakout followed by extreme distribution, like in the sense that like this is all retail buying followed by retail selling with the way that it moves. And to me, if you were still trying to trade this after this, like you were pushing your bias on the stock. So like you got late stage loose. Once you see this dagger, like to me, you take this off your screen for like 6 to 9 months. So I actually wasn't even watching this and it gapped down. I was certainly surprised by the gap down, but this could be an island top. I mean, here it sort of looks like it wants to curl up. But the thing is, the way I approach these is like you do not want to pay attention to this stock for like 6 to 9 months. And you'll notice I have an alert set right here at the gap fill. I probably will never look at this stock again unless this alert goes off. Because this is like massive distribution, huge distribution. So watch for that distribution in these bases. And rather than take questions here, I want to go through a couple of them real quick. So apps is another one that in this base, this was actually showing relative strength during this February kind of correction and growth. It was trying to hold in. But notice right here, we tried to break out and we get that dagger type selling again. And also notice the stage. So here's the first base breakout, second, third, fourth. Notice how all these bases on the weekly, it's nice and tight. And then look at this base. It's like crazy. So like total change in character. And that's often what you're going to see. This is distribution. This is signs of distribution, especially Like this is what that dagger selling looks like here. It's a failed breakout higher. And sure enough, is what you end up getting is it it takes a long time to ever really recover, and it's just chaos. And to me, this actually showed faulty signs. Like I would never have held a stock like this into earnings. Like it repaired and seemed like a good stock here, but like this is still a lower high here relative to this price action. We basically come back up to this previous distribution and then we get slammed again. So to me, this stock, like it could get supported by the 200 SMA here and trade up. I wouldn't be interested in trading this again for months until we set up under like 94, because I think it's too risky. Look at this unfilled gap. But just understand when you're trading a stock that's coming back up into resistance like this, like you're playing with fire. You're playing with fire because you're challenging the dagger sell off again. And I can show you one where it did repair. So Etsy, this was the same thing at the time. It was showing relative strength, and then we try to break out and you get that dagger type selling in the base. So remember, this is like in the base. You're seeing the entire base get sold top to bottom in like 3 sessions. Like that's the type of thing you want to probably avoid for like 6 to 9 months. And now Etsy has repaired, and that it basically has consolidated from February through now. And to me, this is repaired, and it's probably it is heading higher. But notice how long it took once you got this dagger type selling. So like when you start to see stuff like this, when it's late stage, so think about Etsy, first stage, second stage, third stage is getting a little looser. And then look at the total change in character and how this base is being built versus these previous bases. So take note of that and don't get sucked in on these late stage bases, because when they shake out, like they really get slammed. Like Etsy went from like 200 to 160. And I know somebody will say like, oh, well, it's a gap. They missed earnings. It's like, yeah, well, it did that because of how it was set up, in my opinion. So I do think Etsy has repaired, but notice how long it took to repair. And I'll show one here like Roku. There's an analyst out there that's very high on this who's called my analysis on this subjective and worthless and stuff. But this was a punch bowl of death pattern from O'Neill Disciples, no doubt in my mind. They make it look like a cup and handle, but it's too deep. It's faulty to me. And you can take swing trades and stuff like this, but I'm always very suspicious something coming off the lows like this, that it's going to work, because it's just like too deep. And this could base out here, but again, I think this isn't worth paying attention to until it has many months to set up under this 490. There's just better opportunities. Like you don't have to buy it down here. You can buy it up here. But just understand major distribution, and it's going to take time for this thing to work through that, if it ever will. Like I have no idea if it ever will. I kind of went through Peloton, Snap, Etsy. So like those are some of the popular names I wanted to show. Now here's one that's just recently repaired, where I felt the same way on this one, and that it had like dagger type. Well, this was just massive distribution off the top, and then extreme distribution here in my eyes. And one of the things you'll see people talk about is 3 waves down before a base can repair. So 1 wave is selling, 2 waves of selling, 3 waves of selling, and then it has the potential to repair. But even once it had the potential to repair, it took another like 6 or 7 months to repair. And this is like very difficult to trade. Sure, you could have caught it here, but guess what? They like retested your price. Like that sucks to try to sit through that. And even here into earnings, like who actually held this into earnings who's more of a trader? Like probably not many people. But then if we look at this monthly here, after it's had many months to repair, we get this gap up on volume, and then you get the flags, very similar to Roblox. And now, this monthly is looking pretty good to continue higher. But I guess just my point is, like, once you see major volume breaks off the top, like, don't expect this to work in here. Like, expect this to need a long time to rebuild. And, you know, if you want to be the guy that, says the fundamentals are awesome, great. But it had a 50% correction off the top. And, if you got out here, you literally could have got back in at the same price, like 11 months later. And, like, think about all the opportunities in here that you could have had. So, that's more how I trade. I'm not a buy and hold guy. And I think when you see these major volume breaks, just respect them, because they take a long time to repair. So that's kind of all I'll say, because I think I've seen a lot of people get smoked on Twitter. And I know all of them held through all this, but I'd be willing to bet that a lot of them who are talking about stocks all day on Twitter probably didn't actually hold through here. But maybe. But just respect these big volume breaks in these growth stocks, because they take 6, 9, 12 months to repair, and some of them never come back. Like, some of them never come back. I love this stock. I love the story, but right now this thing is way off the highs. And so for me, is what I'll do is I'll set an alert right here, and when we close this gap, I'll consider trading it again, maybe, but really probably not until up here. And the thing is, like, this may never get back there. And for me at least, where like I trade for a living, like, I can't afford to take a hit like that, because then I can't buy diapers. So just really want to point that out in some of these growth names, just like how hard they can get hit when these sell signals trigger. And you can see my work here. I actually thought that Peloton was going to put in an inverse head and shoulders here, but I wasn't interested in buying it until it was above these levels, because you really need them to show you that they want to trade higher. They need to get back above this 200-day. Like, most big winners are never going to work if the move starts below the 200-day. The move will usually always start above the 200-day moving average for sure, and for sure, if it's gonna work. So for me, my style, like, don't try to pick a bottom in these stocks. Like PayPal, someone asked me, I think earlier today, is this a reversal extension to the downside? And it very well could be. But I'd rather wait. Like, I'd rather buy this like up here, because there's so many good opportunities in other names right now, and you're just fighting a lot of this resistance. Look at all this distribution. Like, look at this volume relative to here. Like, this is huge selling volume. Let other people fight this thing, and be patient for it. Like, this is where the change of character happened to the downside. And sorry for all these lines. Let me clean this up. This is where the change of character went down. So just, like, wait. There's no reason to try to pick a bottom in this stock. It could go down to here, and then maybe it makes a new high in like 5 years or 10 years or whatever. Like, someone made a good point on Twitter the other day. This could be moving from a growth to value situation. Microsoft started doing that right here. Microsoft didn't make a new high again until, it took 15, 16 years. And Microsoft's been a freaking amazing stock.